Are you thinking about buying real estate with an LLC? Well, you're not alone, but here's what most people don't realize. Yes, you can use an LLC to buy property, but the real question is, should you? Well, let's break it down. So what is an LLC in real estate? Well, an LLC stands for Limited Liability Company. It's a legal structure that lets you own real estate separately from your personal name. You can use it to buy rentals, commercial properties, short-term rentals, even land. The key to this entity is that it gives you a layer of protection, and that's exactly why investors use it. So here's the number one reason to use an LLC in real estate: liability protection. If something goes wrong at the property, a lawsuit, an injury, a tenant dispute, the LLC is on the hook, not you personally. Your home, your savings, and your personal assets, they are shielded, protected. That's why experienced investors don't own properties in their personal name. So how do you buy real estate through an LLC? Nowadays, you don't even need to use a third-party attorney or a legal website. Step one is you can go form an LLC in your state that you'd like to open it up in. And you don't need to open up the LLC in the state that you live in or do business in. I'm a resident of Nevada, but I have LLCs throughout the country in different places that I own properties. I prefer to have many of my companies' LLCs in Nevada because of the favorable laws here. Wyoming also has favorable laws for LLCs, and we'll get into those benefits in another video. So forming your LLC. Step one is form the LLC in your state, meaning go to the Secretary of State and register the LLC in that platform. It's really simple, and we'll put a link in the description below to help you if you want to open up an LLC in Nevada. Next, and you may want to do this even before you open up the LLC in your state, is go to the IRS.org website and get a EIN number. This is an employee identification number. You must have one of these in order to open up your LLC. This is how the IRS will track your entity and ensure that you pay taxes. Then you're going to open up a business bank account. It's very simple. You're going to show the bank the articles of organization and the members, and they will allow you to open a bank account for that company. This bank account is not tied to you personally. You are the signer or the member or manager of the LLC, but this bank account is the asset of the LLC. Then you're going to buy property, and you're going to buy property either in the LLC's name, or you're going to buy your property in your name and transfer it later into the LLC with lender approval. Me personally, no matter if it's a single family home, a condo, or a $10 million commercial real estate investment, I always buy property in an LLC. I typically have to personally guarantee the loans or mortgages that I take to buy the properties, but the lender is clear that I'm putting the deed or the ownership of the property in the LLC's name, and I am the controlling partner, the member, and the manager of the LLC. So they allow me to buy the property in the LLC's name and not my personal name, giving me that liability protection. This does not change the fact that I am on recourse or I'm personally guaranteeing the note. If I default on the note, the lender still gets the property and they have the rights to the LLC and the deed, yet it's not in my name personally. And if I were to get sued by a tenant, then I would have that liability protection. Now, once you're up and running the property, you're going to need clean books. We use QuickBooks Online. It's simple, it's easy. You'll also need to get the right insurance policies to protect the asset and treat the LLC like a real business. This means not commingling funds, no personal expenses paid from the LLC bank account or from the LLC's credit cards. So when should you use an LLC? Well, always. You should consider using an LLC if you're buying multiple properties, if you're investing with partners, if you want liability protection on one property, if you're flipping a property, if you're wholesaling a property, or if you're developing a property. If you own any asset, I highly recommend owning it in a single asset LLC. Sometimes in the institutional investing world, they call it a SPV or special purpose vehicle, but it's the same thing. An LLC gives you that liability protection from litigation personally. If you're just starting out with a single rental, I still suggest opening up an LLC, and personally, you can manage it or you can be the member or both, but it gives you that liability protection. If you own property in separate states, some investors like to open up an LLC in the state that they do business in or where the property's located. You don't have to do this. I typically open all my LLCs in Nevada because I like the favorable rules for LLCs here in Nevada, my home state. But I do need to register it with the state that I own the property in and get a license to do business in that state. Either way is fine, but if you have hundreds of assets, it's easier if you register them all in one state so that you can keep things clean and simple when you have to renew each year your LLC registration or license. And remember, please, on the accounting and bookkeeping side, keep the finances separate. Every LLC needs its own bank account. It needs its own reconciliations done, its own tax return filed, and keep it separate from your own personal name or commingling with other properties or other businesses that you have. And work with a CPA and a real estate attorney that will help you draft your operating agreements. Almost all 50 states require LLCs to have an operating agreement. Regardless if the state requires it or not, it is important. Even if you're the single member of the LLC, an operating agreement outlines the terms of the ownership and of all the nuances and details of how the property or ownership is treated. If there's multiple partners, it's essential to have the operating agreement to resolve any partnership disputes. I want to recommend using an attorney for this operating agreement. That way, there's clear provisions and parameters around voting rights. If an investor or a partner wants to be bought out, if there's negligence, if there's any issues or concerns in the LLC, an attorney is going to address them and the way that income and losses are taxed. Most operating agreements do not address these things, and beginning investors, even intermediate investors, don't understand what to look for, yet a partnership or real estate partnership attorney will be able to address these items, put them in the operating agreement. If it comes up, it's in writing and you can address it rather than the operating agreement missing it. And now you're going into mediation or having a dispute, depending on what happens in the partnership. It's better to be safe, not sorry, when working with a real estate attorney and paying an extra $1,000 or $2,000 to have a solid operating agreement where you know all the angles of the asset and the partnership will be covered. In the comments below, I will put my favorite real estate CPAs because I know they know what they're talking about. They help me and my investors work through all the tax challenges that we have as real estate investors and developers. So final thought, yes, you can buy real estate through an LLC. And for many investors, it's the smartest move long-term. You want to start with a simple business plan. Remember, the business plan is the most important thing, not the legal structure. Yet, get an LLC in place, put the asset in the LLC, and scale up as you grow. Every time you buy another property, open up another LLC. And then at some point, if you want extra legal protection, you want to open up a holding company that's an LLC, and that holding company will own all of the individual assets, membership interests, or ownership interests of each individual LLC that properties are held in. When working with any legal professional, remember that the legal structure should not slow you down. So if you want help structuring your next LLC, making sure that all of the partnership details, ownership details, tax details, are all covered, then download my free guide, the Real Estate Entity Structure Checklist. It walks you through when to use an LLC, what steps to take, and how to avoid common mistakes. And if you felt this video was helpful for your real estate investing, then check out my next video on how to structure real estate partnerships and the profits that you split along the way. So check it out, and I'll see you on that next video.